And now it's time to check up on Asian market performances on this Wednesday. And Asian equities are trading lower in early trading as oil prices continue to weigh on trading sentiment. On the Chinese mainland, the benchmark Shanghai Composite swung between losses and gains after rallying more than 3% in the previous session, and it is now down nearly 1% at 29.78, losing the 3,000 level. Investors are cautious despite the central bank's liquidity injection and concerns over new share offerings weighed on trading sentiment. And now we go live to Timothy Pope in Shanghai to give us more insight of the trading action this morning. Hi there, Tim. Take us through morning trading today.
Morning, Guanxin. Markets did open lower. They originally managed to regain yesterday's closing figure within about an hour, but trade has been pretty choppy, even though the trading range has really been sort of around 1% lower. The markets have been tugged in a couple of directions this morning. On the one hand, there's been some pressure on global markets after another drop in the oil price, and there have been the pressures on the mainland markets due to the new share offerings. And we've also got, on the other hand, investor hopes of fresh policy stimulus. Obviously, the drop in the oil prices helped fuel-intensive industries this morning. All of the major airlines are up pretty strongly. Air China by the 10% daily limit, and China Eastern Airlines and China Southern Airlines by around 5%. President Xi Jinping's visit to the Middle East has also helped construction and One Belt, One Road stocks make some gains. China Communications construction is up by more than 7%. But there's obviously a downside to oil price drops. We can see that both of the major oil refiners this morning, PetroChina and Sinopec, are both down around 1.5%. And small caps are suffering too, with the China export dropping 1%.
And we're approaching the Chinese New Year when liquidity gets scarce and Chinese markets usually steep back. But the PBOC has moved to try and ease pressures. What more can you tell us?
And that's right. The People's Bank of China said late yesterday that it's planning to inject 600 billion yuan, so more than $91 billion into the money markets via reverse repos to help ease that Lunar New Year liquidity pressure. And obviously the holiday begins early next month, and the PBOC usually does move to keep rates steady in this season by injecting cash into the system. But we've heard that analysts saying there's another side to the move this year, and the bank could be trying to keep its policy moves more flexible. And by injecting cash now, they can put off having to cut the bank's reserve requirement ratios, which do have a bit of a longer term effect on the banking system. But just yesterday we saw the PBOC inject around more than 400 billion yuan into the banking system already. So they are really trying to take the edge off the liquidity squeeze.
Indeed, and they moved very early this year. Thank you very much for the update. Timothy Pope live for us in Shanghai.